Hello students, welcome to online classes presented by Saujanya, Department of Commerce and Management. Dear students, in today's class we are going to discuss with subject Financial Management. Before going to our topic, let us discuss with syllabus of Financial Management. So basically this subject consists of 5 units. First unit and last unit are theory parts and remaining units are practical oriented. So first let us start with the first unit. It is all about introduction of financial management. It is about basics of financial management. That means meaning, nature and scope of finance. And moreover, most important topic in this unit is profit maximization and wealth maximization. And next, finance functions, investment, financing and dividend decision. Next, come to second unit. It is about capital budgeting. That means where we have to invest, when we have to invest, how much we have to invest. It is based on the capital of the organization. So in this unit, capital budgeting, in that nature of investment decisions, investment evaluation criteria, net present value, internal rate of return, profitability index, payback period, accounting rate of return, NPV and IRR comparison, capital rationing, risk analysis in capital budgeting. Next, come to unit 3. It is about working capital, in that meaning, significance and types of working capital, financing of working capital, sources of working capital, management of inventory, management of cash, management of account receivables, optimum credit policy, credit collection, factoring service, various committee reports on bank finance, dimensions of working capital management. And next, come to unit 4. In this unit 4, capital structure theories, in that traditional and hypothesis, determining capital structure in practice, capital structure planning, cost of capital, meaning and significance of cost of capital, calculation of cost of debit, preference capital, equity capital and retained earnings, operating and financial leverages, measurement of leverages, effects of operating and financial leverages on profit. And last unit, unit 5, it is about dividend decisions. In this unit, types of dividend, dividend models, determinants of dividend policy, practical aspects of dividend. So this is about your syllabus. Now let us discuss about introduction of financial management. So here every business enterprise, whether it is small, medium or big organization, needs finance to carry out its operations and to reach the objective goals. So here so basically finance is the basic aspect of every organization. Moreoverly, we call it finance is the liability of every organization, because without finance we cannot run the organization. For example, for human body, blood is very important. Without blood we can't live. Like that, if there is no proper finance, the organization will be dissolved. Because of that, we call it as the finance is the activity concerned with the acquisition and conversion of capital fund meet the financial needs and overall objectives of the business. This is called it is a finance. So in this finance there are two types. One is private finance and the other is public finance. Here private finance means what individuals and partnership business, these are all comes under private finance. And public finance means which related to the central and the state government, they also required finance. So the financial management is concerned with planning, organizing, controlling of raising funds, investment of funds, and distribution of fund for achieving the goal of organization. It is nothing but managing of fund. Finance means it is nothing but managing of fund. So an enterprise needs finance to meet its requirements in the economic world for smooth functioning of a business activity. Proper flow of fund is required of time to ensure maximum profits. So it is necessary to understand the need of finance, which plays a vital role in business. So all the business operations are concerned with maximizing profits. A finance manager should be able to integrate with other departments for improving the efficiency of the business process by proper utilization of finance. So the term financial management can be defined as the management of the flow of funds in a firm, and it deals with the financial decision makings. The financial management as practiced by corporate firms can be called as the corporate finance or business finance. Finance function has become so important that it has given birth to the financial management as a separate subject. So finance is the study of how investors allocate their financial resources over time under conditions of a certain and uncertainty. It focuses not only on the raising of funds but the business enterprise, but also its optimum uses. So now let us discuss the meaning of finance. So see here, the term finance is derived from the Latin word fins, which means end or finish. Finance can also be interpreted in many ways. That means we can also be called in many ways, such as fund, money, investment, capital amount, etc. So here finance act as a medium for business, which involves the acquisition and usage of funds in various departments such as production department, purchase department, research and development, etc. So here finance is the lifeblood of business. Finance is the provision of money and at the time when it is required. So finance is an art and science of managing money. Finance is the set of activities dealing with the management of funds. More specifically, it is the decision of collection and use of funds. Finance is also refers to the science that describes the management, creation and study of money, banking, credit, investments, assets and liabilities. Finance consists of financial system which include public, private and government bodies, and the study of the finance and the financial instruments which can relate to countless assets and liabilities. So all the business operations are concerned with the maximizing profits. A finance manager should be able to integrate with other departments for improving the efficiency of business process by proper utilization of finance, as we already discussed. So to integrate, the financial manager has considered the other financial activities like marketing, production, human resources, research and development, technology, etc. So here finance plays a key role in the business. Hence finance is very important, um, very important in every business. So hence finance is very important for every business organization, which keeps the enterprise dynamic. And next come to the definitions of finance. See here two definitions are there. According to Paul G. Hastings, finance is the management of the monetary affairs of a company. And next definition, according to the Body and Merton, finance is the study of how scarce resources are allocated over time. not only these two definitions, there are so many definitions. Financing is the process of organizing the flow of funds so that a business firm can carry out its objectives in the most efficient manner and to meet its obligations as they fall due. This definition according to the Kenneth Midgley and Ronald Burns. According to Simon Andred, finance is the area of economic activity in which money is the basis of various abonnements, whether stock market investments, real estate, industrial and construction, agriculture development, and so on. So these are all the definitions of finance. And next come to the business finance. Here come business finance. The term business finance is made up of two terms. One is business and the other is finance. The term business literally means a state of being busy. Business means state of being busy. Business refers to a particular area of activity in which the aim is to make profit, to earn profit. It is a complex term which covers the entire chain of human activities in an organization. So finance is the term associated with selling and buying of products or services. Next come to finance. Finance refers, as we already discussed in the introduction part, finance refers to the flow of funds in an organization. It involves usage and control of money for required business operations. So now come to business finance. Business finance refers to the funds and monetary support required by an entrepreneur for carrying out of the various activities relating to business organization. So it is needed at every stage of business life cycle. For instance, for example, if we start a business, if we want to start a business, it is essential for acquiring fixed assets such as land, building, plant and machinery, etc., as well as for meeting the day-to-day expenses in the form of payments of wages and salaries, purchasing raw materials, etc. In order to successfully operate and expand the business, funds are necessary for promoting and marketing the products, distributing it to the prospective consumers, as well as for managing the firm's human resource base. Further, in the changing business environment marked by increasing competition, additional funds are desirable for continuous modernization and upgradation of the business unit. Finally, business finance deals with acquiring, administrating and distributing funds in an organization to meet the financial needs and overall objectives of the enterprise. In other words, business finance deals with the procurement of capital funds and their uses in various types of assets. Thus, business finance is concerned with how the finance of a business enterprise should be managed with the proper planning and controlling of the funds. So already we discussed in the introduction part, financial management is concerned with the planning, organizing and controlling of raising of funds, investment of funds and distribution of funds for achieve the goals of the organization. So here business finance can be classified into three categories. One is sole proprietor finance, second one is partnership firms finance, and third one is corporate finance. See here, sole proprietorship. Sole proprietor means sole proprietor finance refers to an single individual having overall control of the business firm. That means only single person deals all the business operations. In this type of business finance, a single owner promotes, finance, and controls and manage the entire business operations. He only bears the entire risk of the business. This is the sole proprietorship. And next come to second one, partnership firms. Partnership firms are those which is concerned with an agreement of two or more persons to run business with an objectives of earning and sharing of profits and losses. Here the agreement between two or more persons. They equally share their profits or losses. It may come into existence either as a result of the expansion of sole trader business or by an agreement between two or more persons. Next one, corporate finance. Corporate finance is a legal entity having limited liability under a given names. That means the assets are owned by a corporation rather than its members, and a corporation corporate liabilities and the obligations met by organization, not by the owners or the members. Corporate finance refers to the study of finance for incorporated bodies. So this is the business finance. Next come to the nature of finance. Nature of finance. Finance management is one of the important education which has been realized worldwide. Nowadays, people are undergoing through various specialization courses of financial management. Second one, the nature of financial management is never a separate entity. Even as an operational manager or a functional manager, one has to take responsibility of financial management. Next, third one, it is a foundation of economic activities. Finance is a foundation of economic activities. The person who manages finance is called as the financial manager. Here, important role of financial manager is to control finance and implement the plans. Next, fourth one, financial management is multidisciplinary. Here the nature of financial management is multidisciplinary. Financial management depends upon various other factors like accounting, banking, inflation, economy, etc. for the better utilization of finance. And last one, approach of financial management. The approach of financial management is not limited to business functions, but it is backbone of commerce, economic and industry. So dear students, this is your today's topic. I hope you understood this today's topic. In next I will meet in with other important topic in our next session. Until bye, take care. Thank you.